Welcome back to the final segment of Investing with Confidence. I am your host, Joshua David, and we are having a great time analyzing some different stocks, some ETFs. We're talking about the futures market with oil. In the next segment here, we're going to talk about gold. But we do have tickets to an investing class I want to make sure our listeners have access to. We've had a lot of people call in for this investing class, hands-on right here in Bloomington. I think that's one of the most, most comments I get about these investing classes. People want physical places to go to learn how to trade and invest. You can't learn online or out of a book. You just can't do it. You can get some knowledge, but you're not going to build any skills. And these are pretty awesome for our listeners. So just call 952-814-4410 for 2 tickets for this investing class that we do here during the week. We're a local in Bloomington. During the week, we also have these on the weekends, even in the evening. So pretty much anybody can attend these. You can also go online to our website. Just go to otamin.com. That's OTAMINN.com. So you were talking about oil in the last section, Al, and you're talking about how that's kind of the hedge for inflation right now. And it used to be gold, as you were talking about.
Yep.
Gold hasn't really performed or hasn't been really a hedge for the markets lately. It's just been kind of a different beast lately. So let's talk about that a little bit. I mean, gold right now roughly at about $1,844 per ounce, and I think that's per troy ounce. I think that's what they call it, and it's definitely off its highs from back in, probably 2020 or 2019, and we're seeing some nice demand zones develop on shorter time frames on gold, which potentially can say, hey, okay, if price comes back to these demand zones, it could shoot it higher.
Right.
And these are actually off of the mastermind grid I was talking about, one of those tools that our sponsor, Online Trading Academy, has that gives trading ideas and trade setups for our students to make smart investing decisions. And that helps build confidence. And that's, the name of the show,
right?
Investing with Confidence. So let's talk about gold here. I like the 4-hour chart to make investing decisions, and it's not a long-term perspective. It's not a short-term. It's kind of in the middle. And a lot of people that work, let's just say during the day, like these mid-term time frames to make decisions because it's kind of like swing trading. Basically, you place your investment or your trade, and it works for you. Basically, there's nothing for you to do once it's on. Sometimes days or even weeks at a time. So that way you can still work, have a job, and still be able to invest in the financial markets. I really like this zone here. There's actually 2 of them, one at about 1813. There's another one a little bit lower at about 1798. And so I see, gold potentially moving higher again. What are your thoughts on gold?
Yeah, well, this is, I think, a really good example of what we've been talking about as far as just following the facts. The inflation has been running like close to 7% right now. Typically, if that in a situation like that, gold would be moving higher, but it's not. For the year, it's down about 3%. There's something just kind of wrong with that picture if you're looking at trying to make an investment choice based on what's happened in the past or what should happen or what you think should happen. When inflation is high, people think gold should go up, and that's typically what it's done, but it hasn't done that now. So we've had a pullback in gold. Josh just mentioned a couple of those demand zones, in other words, zones where it looks very much like there's some buyers ready to come into the market and buy at that point in time. So the point is, and the important thing is, not to look at what people are saying, not to look at what you think should happen, but look at what factually will make something happen. And that's price action. Price action is really impacted by the big institutions. It's not Josh and me buying something or selling something. It's maybe Warren Buffett buying $10 billion worth of something like he did with IBM years ago. It's maybe, in fact, I think Warren Buffett owns, several 100 million shares of or dollars worth of Apple stock.
Yeah, lots of
it. These guys have enough money. The hedge funds, they can actually, in some cases, they will actually maybe put $5-10 billion into a position to make it move to the point where they want to take the opposite side.
Yeah.
It's manipulation of the market. We talk about that in these classes, and we show you how to make sure that that doesn't impact you in a negative way.
Yep.
Everything you need to know, the good, the bad, the ugly, is on a price chart. And if you know how to read those charts, you read that story that's presented to you on a price chart, then you can make wiser decisions, smarter decisions, and have the odds of being successful in your favor, not working against you.
Yeah, and a lot of people, the futures market for gold, most people don't know how to get into that. You actually teach that and talk about how to get in the futures market in these investing classes that I want to give away tickets to. But also, a lot of investors really like to use gold in their portfolios. And GLD is actually an ETF for gold, and that's only at about $172 per share. So it's a much cheaper way for investors to get into if you want to participate in moves in the gold market. And it's just all about understanding multiple assets in the markets. Al teaches investing classes right here in Bloomington that talks about exchange-traded funds, great opportunities for retirement accounts as maybe an alternative to mutual funds. I want you to touch on that real quick here in a second. But it's all about understanding these different markets as well. You want to be diversified in multiple markets, stocks, options, futures, currencies, which is the Forex market. And then that way you're not stuck to just a one-way strategy when some are going up, some are going down. And that's how you protect your portfolios, hedge your portfolios. And really, to make smart investing decisions, you have to understand these different assets. You don't have to trade them all, just understand what they are and how price impacts each one. So if you want to learn more about that, learn more about making decisions in your retirement accounts, 401ks, IRAs, which you can do that. You don't have to have a broker do everything for you or an advisor. You can do that yourself. Al teaches that in these investing classes. So just call 952-814-4410 for 2 tickets for this investing class here in Bloomington. They're free. They're roughly about 2 hours. When you do that, you're going to receive 2 tickets. You're also going to receive a financial quick start kit just for getting set up, and that'll help you get started right away. So, Al, let's talk about those ETFs. Why are they such a better opportunity than mutual funds?
Well, in a way that they're similar. A mutual fund is a basket of stocks that represent something. It represents a part of the market. It could be one of the indexes. It could be the Dow, the NASDAQ, the S&P 500. It could be technology. It could be financials. Exchange-traded funds are similar in that they are a basket of stocks, but they're not managed like a mutual fund is actively managed. So you've got management fees. Those fees over the course of someone's working life, if you start investing in mutual funds, say when you're in your 20s, it could cost you 50 to 75% of what you could have or should have based on those fees that are taken out. That's
the lost opportunity that a lot of Americans have.
Absolutely. And the cost of using ETFs, exchange-traded funds, is very minimal, almost non-existent.
Think about that for a second. You're being conditioned to be in the highest fee opportunities in your retirement accounts. You've probably been doing that for several years. Learn those different techniques and strategies to lower those fees.
And why do you think that mutual funds are such a highly pushed product by financial advisors?
I think you'll tell us.
It's the cost. It's the commissions, the fees that they get for putting you into a mutual fund. So you're not only paying the mutual fund manager, you're paying the financial advisor. Exchange-traded funds, again, it's a basket of stocks, very low fees, but also you can buy and sell those during the day. A mutual fund, you cannot. You cannot buy or sell a mutual fund during the day. You have to wait until the end of the day until everything is figured out. So if the market is going into a free fall, there's nothing you can do about it. You just have to watch your assets dissipate. With an exchange-traded fund, it's treated as a stock, as a symbol like a stock, so you can buy and sell at any time. One of the most important things is protection. With a mutual fund, you cannot have a stop loss on a mutual fund, for example. You can't do options on a mutual fund, both of which you can do with exchange-traded funds. So you have the opportunity, number one, to eliminate those high fees, number two, to make sure you're protected and to be able to get in and out at any point in time that you want to, whether it's during a day or whenever you want to. You don't have to wait until the end of the close of the market to do that.
Yeah, these opportunities that you've probably been missing out on for probably all your life, these opportunities will be here now. But it's important to take action now because markets have been at all-time highs. We're seeing a lot of volatility, a lot of people afraid that the market's going to go down. If you're listening right now and you're afraid or you think the markets might go down, we'll learn the strategies now to protect. I mean, it could continue to go up. That would be great. But what if you had the skills and the knowledge to protect your portfolios if it does go down? And that's what it's all about, is keeping the capital that you have worked so hard for. It's getting to the end of the show, and I want to give away one last set of tickets for the investing class here in Bloomington. But before I do that gaming industry exchange traded fund that I love, it's esports. ESPO, roughly at about $64 per share, off its highs, right? Some potential opportunities. It's kind of at a wholesale price now, so just a potential opportunity for people. We talked about Activision Blizzard is in there, Roblox, AMD, NVIDIA. So some great movers in these markets, and that's a nice ETF that people like to invest in. So just something that someone might want to look at. So we call 952-814-4410 for 2 tickets for the investing class here in Bloomington. Al, real quick, you got about 40 seconds. Words of wisdom.
All right. Actually, I'm going to paraphrase. I somehow got on an email list from a physician, Dr. Benedetto, but this is something I think that really applies to investing. Success in anything, whether it's finances or health or relationships, shouldn't be easy. If it was easy, it would be average. Success is a product of hard work, focus, perseverance, compounded over time. And that's not average. You don't want to be average. It's not about fast results or instant gratification. It's about following a process that builds habits that creates big success.
2 tickets for the investing class. Call 952-814-4410. As always, same time, same place next week. Until then, retire young, my friends.